how my options trading strategy has changed in 2019 heading into 2020. David Jaffe with beststockstrategy.com, and in this video you are going to learn how I have modified my options trading strategy so that I have no losing trades this entire year. And in my smaller account, how I am up over 100% this year, and in my larger account, I'm up close to 50% this year. The primary way that my options trading strategy has changed in 2019 is that I am much more patient than I used to be. In my larger account, I only make about 2 to 3 trades every single week. And in my smaller account, I make about 1 trade every week and a half. This strategy runs counter to what you hear from Tastytrade and from Option Alpha. And as I've discussed in some of my other videos, I don't believe that anyone who follows Option Alpha will actually make any money. And I believe that the majority of the people who follow Tastytrade will also lose money. The reason for this is that Tastytrade tells you to trade small, trade often. But when you trade often, you are not discerning between the individual opportunities. It is your job to allocate capital to the absolute best opportunity. You need to view yourself as a batter in baseball, like in the batter's box, and you are constantly being thrown pitches. Now, in baseball, a pitcher wants you to swing at bad pitches. If your goal is to get a hit or to hit a home run, if you swing at bad pitches, you are going to get yourself out. I am completely okay with letting pitches go by that are not good opportunities. I will only swing at the absolute best pitches. A few tactical tips that I have implemented into my trading strategy in 2019 is that I have begun to trade spreads as opposed to naked options. Previously, I was a big proponent of selling naked options. However, starting around the midpoint of 2019, I have switched over to selling spreads. Previously, I thought that the incremental premium that you receive and the ease and the advantage that you have from trading naked options is better than trading spreads. However, I now believe that the tail risk protection and the enhanced capital efficiency outweighs the reduced premium and the disadvantage that you have when trying to roll and manage a position. Because the fact is that probably only about 2 or 3% of our trades are ever in need of being managed. So therefore, that leaves the reduced premium that you receive versus the increased capital efficiency and also the tail risk protection. And in my opinion, I definitely believe that the increased capital efficiency and the tail risk protection outweighs the reduced premium that you receive and the increased difficulty when rolling and managing positions. I also believe, as I'm a big proponent of making sure that you're disciplined, I believe that for many people who trade options, they are going to end up trading too many spreads, and this is going to get them in trouble. Remember, your buying power reduction when selling spreads is the width of the strikes less the amount of premium that you receive. So if you sell a spread that is $5 wide, then that means that, and let's say you collect $1 of premium, that means that for every spread that you sell, and you're going to have a buying power reduction of $400. So you have the width of the strike, which is $5, one contract is 100 shares, less the premium received, that is $1 per share or $100 per contract. If you compare that with a naked option, where let's say you're selling a naked option at a strike price of $100, $100, 100 shares means that your maximum loss is going to be $10,000. And typically the brokerages reduce your buying power by about 12 to 20% for every naked option that you sell. This means that if you sell a naked option with a strike price of $100, that your buying power is going to be reduced by at a minimum $1,200 and at a maximum $2,000. So when you compare the buying power reduction of $1,200 to $2,000 for a naked option relative to selling a spread, which is going to reduce your buying power by $400 when you sell a $5 wide spread, then you can see that selling a spread is anywhere from 3 to 5 times more capital efficient. Additionally, it provides you with the tail risk protection, and the reduction of premium is not overly substantial where it can compensate for the increased capital efficiency and the protection. So that's probably the biggest change that I've made, is that I have now switched over to selling spreads. Additionally, I try to make all of my trades within the last hour of trading. So I try to make all of my trades, all my opening trades, within the last hour of trading. This takes a tremendous amount of discipline. You know, it's really funny. I get a lot of messages from people who try to oversimplify the strategy that I teach. And then when they try to implement it, they sometimes lose money, or they'll make about 10% a year. I'm up over 100% in my small account and over 50% in my larger account. The fact is that just like everything else in life, you might know what to do, but unless you gain the experience, the knowledge, and the actual expertise and discipline, then you are unable to be a successful trader. And that's one of the reasons why I have so many students follow my trade alerts, because even though they might not like paying me $350 a month for the trade alerts, by not being a member of the trade alerts, they are costing themselves substantial money. And that's why they all subscribe, because not only do I make things easier for them, but they actually profit tremendously by following my trades and also teaching themselves how to be a disciplined and successful and profitable trader. So let me go over some of the notes that I wrote down. I trade less often. I'm much more patient. I trade spreads. I trade later in the day. And another thing is I've reduced the size of my watch list. The more money that I have in my account, the more concentrated my positions are. So I guess that pretty much wraps things up. The big takeaways of how I have modified my options trading strategy in 2019 and also in 2020 is I now trade spreads because I believe that the enhanced capital efficiency and the tail risk protection outweigh the reduced premium and also the more difficulty in managing the position. So again, I trade spreads because the enhanced capital efficiency and the tail risk protection are greater, and they outweigh the reduced premium and also the slight increase in difficulty when rolling and managing the positions. I trade during the last hour of the day. I am much more patient. I view myself as a batter in the batter's box, where I let a ton of pitches go by and I only swing and allocate capital to the best opportunities. And additionally, I have decreased the size of my watch list, and also I am more concentrated in the number of positions that I trade. In my larger account, it is not unlikely for me to have positions in only 4 securities. So typically I have positions in about 4 to 6 securities in my larger account. And that account is huge, yet I only have positions at one time in 4 to 6 securities. David Jaffe from beststockstrategy.com. Visit beststockstrategy.com if you want to receive free options trading education. I provide the best options trading education services out there. So if you are interested in becoming a successful and profitable trader, then you're definitely in the right place, because nobody else is able to provide you with the education, with the attention to detail, with the customer service that I am. And if you have any questions, leave a comment below. Hey, I want to provide you with an update on my account. Today is Saturday, December 7th. And as you can see, in this account, I'm up around $6,000. That equals out to about 115% gains on a year-to-date basis. From a historical perspective, on a year-to-date, if you want to look at all the underlyings, I've had 0 losing trades this entire year. So it is definitely possible for you to earn substantial returns while reducing your portfolio volatility and your risk, and also winning every single trade that you put on for the entire year. It's definitely possible. Regarding my existing positions, I have 1 position on in McDonald's. I have 1 position on in PayPal. I make about 1 trade every 1.5 weeks, so I don't overtrade. I'm actually using Tastyworks, even though I don't really like it, because it takes me about 10 times longer to enter in a trade as it does for my larger account in E-Trade. Do I think that earning 100% every single year is realistic? Definitely not. 100% no. I think that I earned around 30% in January because remember December of 2018 was a down month. So so a lot of January was simply just recouping the paper losses from the large sell-off in December 2018. But even so, I think it's possible to earn around 40% every single year. Do I think that you're going to win every single trade that you make every single year all the time? No, definitely not. That's just simply unrealistic. But as you can see, I mean, it's definitely possible. Now, even though I'm using Tastyworks software, even though I'm not really a big fan of it, I do definitely believe that if you follow Tastytrade, you are probably going to end up losing money. And the reason is that they encourage you to trade way too often. And what that means is you are going to enter trades that you have no business allocating capital to. So, all you guys like to follow people who make things overly complicated. They look at things like IVR and delta and theta, and they look at charts and candlesticks and technical analysis and gamma and all this stuff. The point is that when you do that stuff, you overcomplicate your trading and you make things much more difficult on you than it really needs to be. I would highly recommend that you go to your fake guru and you ask them to make a video like I'm making for you right now. I'm banging out this video in about 2 minutes. And you can just ask them, hey, take a quick screen recording from inside your account to show me your year-to-date performance. Now, make sure it's actually from a legitimate brokerage. Tastyworks, Schwab, Fidelity, E-Trade, TD Ameritrade, Interactive Brokers. Those are all legitimate brokerages. But many of the other ones, like SureTrader, which was recently shut down, those can easily be gamed. So just go to your fake guru who you believe in, who expresses a Mr. Rogers type of behavior and who acts like your best friend, and ask them to take a screen recording that shows their performance. Do I think that they're going to be up 115% with zero losing trades all year? Definitely not, because I think that it is extremely important for people to separate the emotional aspect versus the results. Everything that, whether it's my program, whether it's my trade alerts, is focused on one thing, and that is getting you the absolute best results. Because if you follow a fake guru, the second that you press that submit button, the market does not care whether you've learned candlesticks or 3 special chart patterns or dark pools or anything else or any of that additional bullshit. The only thing that matters is that you make good decisions. If you overtrade, if you follow false leads and you try to learn like things that are a complete waste of time, you are going to end up losing money. And I don't care how much you like your fake guru, how much you believe in your fake guru, how often you believe that they have your best interests at heart. The fact of the matter is that if you sell iron flies on ETFs, there's an extremely high probability that you're going to lose money. Let me break it down for you further. If you've had one losing trade, you have lost more money than I have lost this entire year. So this is why I always say that if you're not a member of my trade alerts, if you don't take my course, then you're simply costing yourself money. If you choose not to believe that, then that's totally cool. But myself and my students will continue to profit, and the proof is in the pudding. I would just send an email to your guru and ask them to create a 3 or 4 minute video, just like I've done right here, where it shows you year-to-date performance. Right here, $11,218, up about $6,000. And then history, year-to-date, etc. No losing trades. These are all the tickers and the underlines that I've traded. And like I've said before, the proof is in the pudding. So if you want to be scammed by following a fake guru and you want to day trade, you want to trade Forex, you want to join a Discord chat where you can read planted students act like they're making money, while you feel like you're the only person who's losing money. You want to trade penny stocks. You want to buy options as opposed to selling them. You want to day trade or trade Forex and try to turn $500 into $1 million. Hey, knock yourself out. And there's a very high probability that you actually do not deserve to make money, because even if you were given money, you wouldn't know what to do with it. Money flows to those people who treat it extremely well. So I just wanted to provide you guys with an update. If you have any questions, let me know. And if you want to sign up and join, you can go to beststockstrategy.com/memberships. That's beststockstrategy.com/memberships.